Yeah, this is the episode where we're going to kind of bring the full three-part series together, and you're going to get to hear my favorite stocks that hit on each of the bottlenecks of AI.
Hey Alex, how you doing?
Doing great, James. How about you?
Doing wonderful. You ready to talk stocks and more?
Yeah, let's get to it.
All right. Well, this is episode 3 of our AI bottleneck mini series. I'm excited for it. How about you?
Yeah, this is the episode where we're going to kind of bring the full three-part series together, and you're going to get to hear my favorite stocks that hit on each of the bottlenecks of AI.
Yeah, in fact, I encourage anyone listening who hasn't checked out the first two to jump in and check out those videos where we unpack what are the layers of the bottleneck, what each of those layers represent, and then now the culmination of that. And make sure to like and subscribe because we got a great series coming up as well. You want to share a little teaser?
Yeah, so after we wrap up this three-part mini-series talking AI bottlenecks, we got a lot of tension going on in the world. So we're going to be bringing together a series, and we're going to be basically calling it our war playbook. So what should investors do as we deal with the idea that this war keeps escalating, de-escalating, kind of give you the playbook of how you can go about investing during this kind of crazy time.
Yeah, I'm excited for it, especially as a new investor, because inevitably there's always something going on in the world, whether it's war, instability, some dramatic thing impacting the market. And so I suspect we'll have to wait and see, but there are probably some great principles and things to take in mind, like a mindset or what to do or not to do that works, whether it's war or others, some other major instability. Thoughts there?
Yeah, I think that we're going to be able to share both just really good investing principles and then specifically how those tie in to kind of like war scenarios, if you will.
Yeah, and maybe a stock recommendation or something for people to take a next look at as well.
That's right. So people just need to stay tuned.
Awesome, awesome. Looking forward to that. Well, today we're going to culminate here with looking at your preferred picks for each of these bottleneck layers. I'm excited about that. You ready to start walking through?
Yeah, let's get into it here.
All right. Well, which one you want to tackle first?
So we're just going to start from, again, the bottom of the bottleneck and work our way all the way to the end of like that end user. So the first bottleneck we're going to be tackling here is power and grid capacity from
Right.
there.
And no preference or priority order of which layer is a better layer to invest in than the others. In fact, you did that, I think, in the first video where you tier rank from an investment perspective which layers A, B, and C are better than the others, right?
That's right. And that's an important caveat as we get into the video today. I don't like all of these layers equally.
Mm-hmm.
So if you want to know my preference on which layer I prefer, that is in episode 1, and I recommend going and checking this out. But today we're going to be going through, if I had to invest in one from each layer, which one is my favorite?
A lot of these companies in tech, and in fact, the whole market across a lot of sectors, we're coming up to investor earnings reports week. We know we just had Alphabet Google last week, and that was quite impactful. Tell me your thoughts there.
Yeah, so when we go through the list today, it's really important to keep in mind if these stocks have earnings coming up. So in general, I don't like buying stocks before earnings
Mm.
because, like everything we've talked about, we truly do not know what's going to happen. TSM, which is one of the biggest companies in the world, may or may not be on this list, just had their earnings.
Mhm.
They had amazing earnings and the stock pulled back. So again, if I would have bought, assuming they were going to perform well, I'm already down.
Yeah.
So again, keep in mind, when we recommend stocks here and like when I'm throwing out my favorites, doesn't necessarily mean you need to go buy it immediately. Again, this is more just research it and then keep in mind earnings make it extra volatile. So it's an important thing to keep in mind.
Yeah, that's fair. And on a one-to-one thing, I remember last time I was excited for an investor relations report coming out, and I was asking you guidance on, hey, I'm a little worried like it's gonna do well and the stock might pop off and gain 5-10%. Can I get in early? Or, the other
Yeah.
side is if it drops. And I love what you said. You just said, well, why don't you DCA or just put a little bit in before and then save some of that to put in after as well. So that way, if it does drop, you can make some decisions. If it does climb, you can make some decisions, but you're not 100% all in before that. So I appreciated that. Does that still stand?
Yeah, that's my preferred approach.
Mm-hmm.
If I'm like, look, I'm going to be buying the stock and I do want to put in some before earnings, don't go all in. That's the general advice. If I put
Mhm.
a little bit in now, buy a little bit after, I can mentally, sleep a lot better at night knowing that I'm getting a good price either way. There.
All right. Well, without further ado, the power layer, electrical grid. Drum roll, please. Talk to me.
Yeah, so my pick in this bottleneck is Constellation Energy.
Mm.
So they are valued right around $100 billion. They have a PE floating around at 24. Their forward PE is right around the same. So you could say they're going to continue solid growth, but not really pick up for much there. One of the reasons I like this stock, and again, if I've been in Constellation at the beginning of the year, I'm unfortunately down 25%. But if I'm starting a new position in Constellation, I feel like I'm getting a nice discount versus where it was trading at before. That's one of the key things I really like about it. So you can kind of think like from a valuation perspective, it's pretty reasonable given the AI build out that is coming. And that's one of the major reasons that I feel comfortable recommending Constellation Energy. So they are the largest nuclear provider. When I think about data centers needing a consistent source of energy, nuclear is consistent that they can rely on. And that's why they're going to continue to get extremely large contracts. And again, I'm a very big believer in this bottleneck specifically because I think that in general, the US is hilariously underpowered, and we're going to start seeing tons of investment flow into this way. So I feel like they're a very fair value because the stock price doesn't really take into account the future growth that is likely going to accelerate for the stock. So that's why Constellation Energy is my favorite.
Yeah, with global warming, we're going to need more and more resources on how to provide and power all of society's needs, even beyond AI. One quick question for you. So I'm curious your thought process. What did you kind of go through for each layer to say, hey, Constellation Energy is the one I pick? Because there may be a handful of good ones, just challenging that a little bit for our viewers. What made you pick this versus another? Some thoughts there.
Yeah, I mean, there's multiple names in this layer that I really like. So I'm just honestly, the real answer is I'm trying to stick to the theme. Like there's certain layers where I could see owning multiple
Mm.
companies. This is one of those. And again, I think that's where the first video that we talk about my preference for each layer. There are certain layers that I really like that I wouldn't mind owning multiple companies that
Mhm.
play within that layer. I mean, we talked about Vistra Energy. It's a fantastic company. There's other smaller, newer energy plays like Bloom Energy that are more speculative that are kind of like if I'm really looking for a home run hit, those are the kind of stocks that could also play within this layer. So honestly, this is one of those that there are several in here. Constellation is my favorite, mostly because of how the stock has been trending. And I feel like at the valuation you're kind of getting into it now, I feel pretty good about that.
Right. All right. Well, any final words on Constellation Energy?
No, they again of the ones that I have on this list, they're kind of like one of the worst performing stocks. So it's one of those that versus some of these other ones that have ran a lot, you can kind of feel a little bit better if you do want to get in Constellation Energy just because the stock has pulled back this year.
All right, makes sense. Well, next layer, right above that, we have the power coming into the building from those power companies. Now we're handling the power in the building, and that's the building's electrical infrastructure and all of those requirements there. What's your pick here?
So my favorite of this group is Eaton.
Mm.
So Eaton is valued right around 157 billion, and they're more expensive though. They're trading right now at a 40x. Their forward is a 29x, but that stock is up 23%. So when I think about from a valuation perspective, I'm kind of paying a premium right now for Eaton, but I think you're paying a premium because of how integral they are into the build out. That's what's going on right now. So again, those all those switches and all of the energy distribution components that Eaton owns. When you think about distributing power in these massive buildings, you need tons of their parts, and they're really expensive. And if we know that data centers are going to continue to get built out, the amount of future demand that Eaton is going to have because of this is kind of built in. They are more expensive, but I feel like you're paying up because it's almost, I don't want to say guaranteed, but it's like you're paying a premium because that's how good this company is.
Right. And there's certainly a lot of eyeballs and focus on AI related companies. And obviously, this bottleneck concept isn't necessarily new anymore. But it's good call out and good to identify your choice here. I know we've talked about Eaton in a few different videos, so probably be new to or not new to our listeners.
Yes. One other thing to talk about with Eaton as well is I kind of like that they are not solely an AI company, kind of like Constellation. Like there's always going to, like you mentioned, there's always be power needs, right? So Eaton has a massive business outside of just being AI. So when I'm building my AI portfolio, it's kind of nice to have an AI name in there that is not solely AI, but is benefiting from it.
Mm.
So when I'm building it out, like I don't want to be going all in on these YOLO speculative companies. It's nice to have very large, proven companies as part of my mix as well.
Yeah, and I'm learning more and more through my experience, but I love the fact that if you start with the fundamentals and you say, okay, this is a company I have conviction in, I've studied them, I've researched them, they look good, they're on this way for AI, but even beyond AI, they're a strong company. And so even if their stock dipped, but you dollar cost average into it, invest repeatedly on a recurring basis, you get some of the highs maybe, but you get some of the lows too as it goes up and down given market fluctuations. But in the end, you're picking a good company with good fundamentals that you're on the long term investor ride with. And so that's what I've kind of learned through some of our learnings through Alex Talks Stocks channel. Does that still ring true?
Yes, we want to have a long-term mindset,
Yeah.
and I want to be buying companies that I believe in for the long term. And so the list that we're going through today, these are not quick short-term plays. These are all part of like what I believe in is AI and what I believe are also strong companies on top of it.
Do they have an earnings report coming up just for a quick flag for our viewers?
Yeah, so they do have earnings coming up. So that's another thing to keep in mind. If I am interested in Eaton here soon, that I may want to buy a little bit now and then wait to see what they say to see if the thesis I have continues to hold. I think it will. And we can start the beauty with earnings is I get new numbers in the future, which starts bringing my trading forward even down more. And then that's what can cause the stock to go up because people are like, wow, this is at a better valuation. That's kind of what I'm expecting from Eaton. But again, you never know what's going to happen. And it's important to keep in mind when there's earnings coming up.
Yeah, that's fair. Quick pit stop on the value of earnings report. You allude to it here. Not only do you get how they performed, but you get an indicator from them on if those orders are still coming in, if they're going to do better than they did last quarter, those kinds of things, right? What should you be listening or looking for from a earnings report?
So I think it really depends on which company is reporting to know the key questions. But again, I think the easiest way to look is my growth accelerating. And when I have a lot of these high growth companies that we're going to be talking through today, the future forecast is almost more important than the current quarter's results generally. So, in order for some of these stocks to continue to go up when they're already trading at a really high valuation, they need to do a beat and raise, meaning that I beat the consensus estimates and I raised my future forecast. That starts building the recipe of this was a really good quarter. And then if I still see the stock go down, this is when the alarm bells start going off of maybe this is a good time to buy and the stock is not being treated fairly. And so again, this is why you get a lot of information from these earnings calls. It allows me to start adjusting my thesis on if this is a good company or not, and is a key reason why I don't go all in before earnings reports.
All right, so we got Constellation, we got Eaton for electrical infrastructure. Now all that power's coming in, machines are firing up, they're getting hot from all that compute. You need that cooling and thermal management layer. What's your pick here?
Yeah, so my pick here is Veritiv. And Veritiv is valued right around 112 billion. And this is another stock that has done really well. And their valuation is now pretty high compared to some of the other ones we'll be talking through today. So they're trading at a 73x. Their forward is a 42x. So definitely not cheap. But this stock is up 65%. The other thing that's going on is they have earnings on July 29th. So there's going to be extra volatility around Vertiv here in the short term. So when the valuation is this high, they need to deliver with really good growth moving forward. I think that they can continue to do that, and that's why they are my favorite. Cooling is become one of the key components of all of these data center buildouts because of the scale of these buildings and the amount of heat that gets made when I'm doing all of these AI when I'm building out all the AI infrastructure from there. So cooling has been one of those that the secret's kind of out on that layer. Vertiv is the leader. I like investing in the leaders of each of these bottlenecks, and that's why Vertiv is my pick.
Oh, yeah, and probably similar to the first two layers, cooling and thermal management isn't going away after the AI build out, right? That's going to continue. So, is this similarly another company that has legs beyond AI?
I believe so because again, I believe in just chips
Mm.
in general, and if you believe in the future of chips and the need for chips in all sorts of technology, think about autonomous vehicles,
Hmm.
whatever the world's going to be getting into with space travel, whatever we start doing there,
Robots.
chips are needed. Yeah, robots. That's another example. We need chips. Chips produce heat, which means we need cooling. And so again, this is one of those companies that, I mean, their growth is being accelerated because of AI, but I don't think they're going to be running out of any like railways, any ways to grow anytime soon.
All fair points. The next layer, I'm curious your thoughts, which is all right, we're there, we're cooling. We got to pass the data though. So the networking and that data throughput layer, what's your choice here?
Yeah, so if you watch the other videos, this is probably not super surprising of which one I'm going with, but my pick here is Broadcom.
Hmm.
And they play across multiple layers, but I have them specifically in the networking layer because I think this is the most recent kind of growth engine that they're playing in. So Broadcom is a very valuable company as is. They're floating right around 1.8 trillion. So they're much larger than the companies we've talked through so far. Their current PE is a 64. So they look expensive on a current basis. Their forward PE is a 24. So you can see the massive acceleration that they are forecasting for their business. I mean, they are growing triple digits in like their custom chips and networking like components. So I mean, they're seeing significant acceleration. They're up about 10% year to date. So if I've been in them, I've been pretty happy in general. I mean, I've been like basically pacing with the markets. Maybe I'm not terribly happy, but you know, I'm not down huge like I would be with Constellation. They have earnings in early September, so I have a little bit of time before we really get an update from them. But again, I really like that they're playing in multiple layers of the AI stack. They're playing in probably two of the hotter trending ones, custom chips and connectivity right now. And so again, I love companies that I can benefit as the spotlight of AI moves. If connectivity is hot, Broadcom benefits. You know, if we come back to chips eventually, which I believe we are going to come back to chips eventually, Broadcom also benefits there. So they're one of my favorite companies on the list, and they also have a really nice dividend. So we did a great video on dividend stocks, and Broadcom makes the list because you wouldn't think that some of these companies that we're going to be talking through, these high flyers, if you will, also pay dividends. Broadcom has a fantastic dividend that they've been growing double digits on. So I'm a big believer in Broadcom moving forward.
Yeah, they do seem like they're doing well, especially with that forward PE. I happened to take a position in Broadcom when it was at all time high. We've been on a little bit of a AI scare pullback correction as
Mhm.
some of that money's moved around. But it's a great reminder how strong they are. I should definitely DCA why it's down a little bit. So good thoughts there. Any final thoughts on Broadcom?
No, again, I think that any company that we mentioned today that can play in multiple layers is going to immediately move up my list, and that's why Broadcom is my favorite for connectivity.
All right, awesome. We are past connectivity. Now we're doing some of the heavy lifting with the work. Memory comes to mind. What layer or what company in this layer do you recommend? There's a lot.
Yeah, so again, there's a lot, and I think memory is probably this has been the year of memory,
Mm,
right? So anybody you pick in this layer has been a high flyer. I'm going to be picking the newest kid on the block, and that's SK Hynix for
mm,
this layer. So this is another massive company. They're valued just over $1 trillion. Their current PE is a 22, but their forward is floating right around a 7. And again, before I get into any more metrics, I want to put the caveat out there. Memory is going through this evaluation right now of is this a cyclical industry or not? If it is a cyclical industry, memory stocks are hilariously undervalued. If they are a cyclical industry, then these evaluations make more sense. And maybe we're kind of getting towards the peak. So, depending on where I sit in that discussion, I should either be into memory or I should be out of memory. I'm more in the we're probably getting away from cyclical. So, I still see these as stocks as an opportunity, but I think it's really important to note that there. From a performance perspective, what's interesting is they're down about 8% since they IPO'd on the American market. But on the year whole, they're up 170% from a stock perspective. So again, they've ran huge. Like the secret is out for memory, but they are the leader when it comes to memory. And I think that right now they're down 8%. You know, I know I'm not buying at the high. I'm also not getting them at a super cheap valuation just because we know that these stocks have ran so much. But I like getting the leader, and they are the share leader when it comes to this memory. So I like having the leader because I think that when I'm looking as a company on who I default go with, SK is going to be the winner in general. And I think they have a lot of room to gain with share. Micron's the same way. Micron has a lot of room to also continue to gain share, but they have an uphill battle against SK.
Yeah, that's interesting with SK. I did want to ask you one question about that general concept of cyclical. And correct me where I'm wrong. I'm thinking cyclical is the cycle of supply and demand, where if there's a high demand um, and scarcity, the companies have pricing power. They raise the price, drive the stock value up because of their earnings, and they're all pistons firing. Demand
Yep.
drops, and so pricing power lowers, less demand, and it impacts the stock market price, and then that's cyclical. Am I understanding that correctly?
Yeah, so that's it. So we're kind of at that we're at the peak right now, or maybe we're not at the peak
Mm-hmm.
of pricing power. When Micron recently had earnings, they released margins that are actually beating Nvidia.
Mm.
And so it's kind of like a jaw drop moment of how much price is increasing, but it's because demand is peaking. So as soon as demand comes down, they can't charge as much for their products because people are like, I just don't need as much. So the price starts coming down, the margins fall, the stock drops, and that's when valuation starts to tighten. So that's exactly it. So
Yeah.
over time, if we are running into a cyclical thing where demand will eventually fall, then I don't need the components as much and I'm not willing to pay as much. I don't buy as much. The stock goes down because they just aren't making as much money.
Right. And the argument for not being cyclical is the fact that demand is just out. You buy RAM, you put it in with your processing, your SoC chip, but even before demand drops, people want the latest and greatest so they can have more output, more processing power, be able to process all the demand for people hitting up whatever model they're asking questions to or leveraging. It becomes not cyclical because there's always a demand, and not only people need more RAM, they need the latest and greatest. And so I think that's kind of the argument for it not being cyclical. Am I understanding that as
Mhm.
well?
Yeah, and a lot of these companies have said that they are basically sold out through 2028. And the other thing is, I think it was actually Micron recently is starting to make long-term deals with Nvidia. So Nvidia is like, look, I need to lock in my memory that's going to go along with my chips as I ship them out because I don't want you guys to run out on me. Like I want to secure my supply chain.
Mm-hmm.
So you're seeing companies now locking in long-term deals, which will then extend the life cycle of peak pricing because people are so scared right now that they're going to be running out of supply. So that's kind of another layer to this of if the biggest companies in the world are telling me that they're a little bit scared about supply in the future, I mean, I trust their judgment. They know more than we do on how they're about to go sell their products.
Yeah, that's great. And then one final note on SK Hynix is because they're a South Korean company, and boy, that market has been volatile so much where the Korean stock market has had to implement circuit breakers to stop trading because it was just going wild and volatile with people over leveraging the stock price is impacting their country there, which then impacts us. And where you hear whatever is happening in those markets in Asia, which are half a day or 8 9 hours ahead of us, then has impact
Mhm.
on the U.S. market, and then we absorb some of that. It's been really wild watching what's happening with Korean companies, the memory, and it's impacting the U.S. market.
Yeah, and I mean, this is the layer that of all of them we've talked about, this one's probably ran the hardest
Mm.
to date. So I don't think there's as much value in this layer. Just to throw that out there, I just don't think that there is because we've ran so much. Now, granted, I don't see any slowdown coming, but it's much harder to time this because the volatility of this layer has been kind of the most magnified over the past few weeks for sure.
Yeah, and again, remind anyone to go check out our previous videos in the series so you could get Alex's ranking on some of each of these tiers. All right, so that's memory. Now we're adjacent talking about that main core processing power, the semiconductors. What's your company here?
Yeah, so I think if you've watched the channel before, it's no secret on one of my favorite companies, and this is Nvidia. So Nvidia is valued; it's back up over a $5 trillion valuation. They're currently trading around a 32, but their forward is just a 21.
Mm,
And similar to Broadcom, they are up about 10%. So again, I haven't gotten a hurt being in Nvidia, but I've been kind of like trending right along with the market. So given how hard semis have ran this year, it's like a little bit disappointing from there, but they have such an amazing valuation and they are by far and away the number one player when it comes to chips. AMD has been kind of in the spotlight recently. I mean, they've grown triple digits this year. So from a year perspective, I would have much rather been in AMD because they've performed way better. But AMD's valuation is starting to get really stretched. I still truly believe that Nvidia kind of pays the largest company in the world tax, but you cannot argue with their margins, their growth, and their importance to the entire AI industry. So I'm not willing to walk away with them. And from a value perspective, a 21x for a company of their size to be able to continue to grow 70% plus, I mean, it's pretty crazy if you look at their earnings reports.
Yeah, and for me, it's a good reminder. Sometimes it looks less appealing if they're not getting a lot of attention or have these wild daily percentage gains. But I, I I have to remind myself you're a long term investor. Look for the fundamentals, look for the companies that are going to outlast the hype. As you know, being the no hype investor, um, that's really important. And then maybe it's only going up 7%, but it's got a lot of runway and it's not overvalued and you're not buying at the peak and you have some confidence that NVIDIA is around to stay. So I'm not a day trader. I'm not a swing trader. I quickly learned that. That's not my cup of tea, but I would
Yeah.
like to grow wealth and invest. And so going back to your fundamentals, I could see why you picked NVIDIA.
Yeah. And I mean, when you think about future tailwinds, we talked about that a little bit earlier. What do you do when like AI moves on? They have two massive tailwinds that will come eventually. First one is autonomous vehicles. They are the leader in autonomous vehicle AI technology. And then they're also going to be a beneficiary from robotics. And if robotics is going to be the size that Elon Musk talks about, let's be honest, like he has a tendency to overshoot a little bit, but still, robotics are going to be a thing. So those are massive tailwinds that will eventually come on top of what we're already getting. So the growth is not going to be slowing anytime soon.
All right, that's NVIDIA. And if you got in them early, you're even more happy about them. Beyond NVIDIA, now we have the Foundry level. What's your pick here?
So my pick here is TSMC. So they are valued right around $2 trillion. They're currently trading at a 29, and their forward is only a 21. So again, from a forward-looking basis, they feel like a pretty good value. And that's despite them being up 26% year to date. So that's pretty crazy when you think about like they've already ran a little bit, but they still are pretty a good value for a forward-looking basis. They don't have earnings for a little bit. So again, they just reported earnings recently. I recommend going and reading the report. It was pretty stellar yet again. It kind of basically reassured that demand is unbelievably high and that it really is a supply thing that we just cannot supply enough to match the demand. So TSMC is the world's leader in chips. If I'm AMD, if I'm Nvidia, if I'm all these big companies like Apple, I have to go to them basically. And they have a massive lead over Intel and some of the other foundries. So that's the reason I like them so much for this layer.
They are a little bit expensive, not in the PE sense, but just how much their stock costs. But I am encouraged that, as we've learned, you don't have to buy one whole share. You can buy fractions or portions of a share if you don't have the full share price to invest in to at least begin that journey, pick the stocks you in. Maybe you only own half a share first. So I do appreciate that, but I did notice that they aren't necessarily a cheap priced stock.
That's true. So again, fractional shares are the way to work around that.
Yeah.
And one other thing I want to throw out there with TSMC is the reason why they trade most likely on a cheaper basis looking forward is because of their geographic location. So their foundry center's primary base is Taiwan. And the Chinese and Taiwan tensions are real. And the idea of China ever doing anything to kind of invade or take that over is also in the equation. So that kind of scares certain people off of investing in them because who knows what would happen. I mean, it would most likely have very negative effects in the stock. So just want to make sure that everybody keeps that in mind. I'm not terribly worried about that, but it's another reason why they trade on a cheaper basis looking forward.
Yeah, and I think they realize that. In fact, there's this news that have recently come out about them spending billions and investing into foundry centers here in the U.S. to help kind of maybe diversify their locations against that risk. So that's kind of exciting too.
Yeah, and that's a great point to make is that they are actively trying to make that not as much of a thing. And so they're investing huge dollars in the US and other locations. So that's a great point.
All right, so
Yep.
that's the foundry manufacturing for chips that all the big companies use. Next layer is the data center itself build out. What is your pick here?
So my pick here is Comfort Systems. So talk about an expensive stock. This one is currently basically $1,700. So again, knowing how much you have to invest, maybe fractional shares might be a better option here on this one. They're valued at 61 billion. So they're easily one of the smallest companies that I've talked about so far. Substantial, but still not as much. On a current basis, they're trading at a 43 and their forward is 37. So this again is kind of like not a cheap company. They've appreciated a lot. They're up 73% year to date. So you've been very happy if I'm in this company. This company is probably the most boring company on this entire list. That without I think that this would be one of those companies you just overlook in general. So they specialize in HVAC. So think about mechanical and electrical projects as I'm building out these data centers. This company helps with that. So they are critical to building the actual data center themselves. So we're not talking about the function of the AI system. We're talking about the building around the AI system. And that's why they're kind of like an indirect beneficiary of AI rather than a direct beneficiary of AI.
Yeah, so maybe some legs beyond the build out as well.
Yes, I mean, granted, I don't see the build out ending anytime soon for these. I mean, we're going to need so much of these data centers moving forward that we have multiple years built in. But it is kind of good to know that like their core function of their business can work outside of just building data centers and AI. I mean, we need HVAC and other mechanical electrical projects for every building that's like a corporate.
Yeah, I wonder if they're working on the technology to do something similar in space with Elon.
Who
I
knows?
joke, I joke. All right, well, that's comfort systems for that layer. The next one is now all of the culmination of the build outs, and then you have the AI software apps layer. As we mentioned in the previous video, a lot of these companies pretty volatile right now. What was your pick here?
So my favorite of this group is ServiceNow.
Mm.
So they're right around $100 billion valuation. From a current basis, it's kind of crazy to look at because we've been talking about some expensive companies. ServiceNow is a 62 currently, so it looks pretty expensive on paper. Their forward is just a 22. So they're expecting significant acceleration in their business because of AI. From a year-to-date perspective, they are down 33%. They have been caught up in the software apocalypse that has been going on this year of AI replacing their business. The reason I like ServiceNow, though, is for one, I think if you're down 33%, the question you have to ask yourself is this a good time? Is this an opportunity? Or is there a reason that they're down this much? I think the truth lies somewhere in the middle. And again, if you go back and watch our episode 1, software is probably one of my least favorite layers because we don't actually know who the true winners are going to be yet. We're starting to see some green shoots of companies getting success with AI, but we don't have a clear winner yet of who is the software company. But ServiceNow has a massive business that is like a CRM business that corporations use to do all their ticket systems, all that stuff behind the scenes that you don't want to deal with. ServiceNow does that. And when I'm locked into a ServiceNow contract, my business functions around it. It's really hard for me to go to a competitor. So once they have that moat built in, they're in a really good spot. And they just recently had earnings. The stock pulled back again, yet even they raised their guidance. But some of the things that I was looking for in that report is we're seeing increased AI spend. We're seeing increased spend of their current customers. And we're seeing certain customers that used to spend at certain levels up to the next level of spend. So they're continuing to trade their customers up with AI. So it kind of starts dispelling this thing of AI is going to replace them. AI is actually helping them make more money.
Yeah, which makes sense. Of course, the initial fear of AI was you won't need these software companies, and it might have been the AI models marketing and scare tactics to show how important they are. But I tend to maybe believe that what's going to happen is these software companies that already have business, already have a model, a business model, already successful, already integrated deep in big companies, helping them. They're just going to leverage AI to make their efforts, their work, and their value to their customers even better. And that to me seems like it's going to make more sense because there's a lot about these companies like Software Now or ServiceNow knows about their companies and how to help them. So to me that makes more sense. I mean, who am I? So I encourage everyone to do your own research. But that to me makes sense. But yet still volatile, right? This space. So it's got a big still question mark.
That's it. And again, the only reason I feel a little bit more comfortable with this is the reasons you just laid out of like, it's more of like a for sure business model
Mm-hmm.
thing to me. Like, I feel like it's be really hard for AI to completely replace everything that they're doing. And then they've also pulled back 33%. So I can feel really good that I'm not buying at the peak. We're definitely not at the peak. The question is, do they have room to continue to go down for the rest of the year? That's the question. And again, that's why this layer is more speculative to me. than some of those other guaranteed businesses that we've talked through. But if I was to pick one, ServiceNow is my favorite of the group.
Okay, well, thanks for sharing. ServiceNow is your pick for the AI software apps layer. We're going to, adjacent to that is the actual devices that AI is leveraging or built around. What is your pick here at the device level?
Yeah, so this one may bring a tear to your eye because I know you have a very close and intimate, if you will, relationship with them. And this is Qualcomm.
All right.
So they're trading at about an 18, so pretty cheap on a current basis.
Mm,
They're valued at 176 billion, and their forward is a 17. So compared to some of the other companies, even the cheapest ones, this is the cheapest on the list.
mm.
From a year to date perspective, you're down about 3.5%. You're basically flat. So has not had the best year, but they do have earnings coming up. So we're gonna have to really listen in to see if this whole edge mobile AI thing is starting to come to fruition and like what they're gonna be talking about it. So again, they are making the chips that we can use in the phones to kind of bring AI to the device.
Mm.
And so that's why they to me are my direct favorite of this layer because they are focused entirely on the device and making AI function on it.
Thanks for sharing. I don't know if you saw that viral video recently with Qualcomm where they were showcasing some of their new technology and chips, and they brought the robot out. A robot brought it out and was standing there, and right in the middle of the presentation, the robot just collapsed like somebody hit the power button, and it obviously was quite the interruption to their presentation, which obviously they're not a robot company. The robot was using their chips. So something
Mm,
might have happened, but I thought it was pretty funny. But all fair
that's
points.
awesome.
It makes me proud. Qualcomm is doing well, has made the list, but it's um, challenging you for a second. It's against some heavy hitters like a Mag 7 company like Apple, yet you still chose Qualcomm. Tell me about that.
Yeah, I mean, for one, Apple's been on like a really strong run
Mm,
of late. And I'm not as big of a believer in Apple as I would say maybe some large of the larger like investing funds that
mm,
get really into Apple. I think they're such a conservative company and they're so big, they're so slow to move. I still don't think they have a good answer to AI.
mm.
That's why I like Qualcomm because I think they have the opportunity to start shifting their business and becoming much more solely focused on this. Now, granted, the reason why they're trading so cheaply is because they are not as much of a direct beneficiary of AI because it's not as much of a thing yet. So this is more of a speculative piece versus some of these other companies I've talked about. And again, like I mentioned on the other video that we talk about, this is again not one of my favorite layers to invest in just because we don't know who the winner is. But if I was to bet on who the winner could be, that's why Qualcomm is on here.
Those are all fair points. Appreciate you sharing. So, the next series coming, War Playbook, make sure to like and subscribe so you can see when that is released. Hey, we'd like to know if you agree with Alex here on these choices, or do you have a counterpoint? Another company you recommend, please let us know in the chat. By the way, you can also communicate and reach out to at Alex at alextalkstocks.com. Always try to figure out how to explain that. But we got a website, check it out. We got a newsletter that Alex shares a little bit of more nuggets and feedback and insight. Sign up for that, no strings attached. Alex, any final words on these companies as it relates to the AI bottleneck layers and everything we discussed in this series?
Yeah, I think as we wrap the whole series together, I think one of the biggest takeaways I want from listeners is that when I'm thinking about AI, I want to think through it using the bottlenecks. That's how I want my mind
Hmm.
to go through it. And whatever bottleneck is the next one that is going to be tight, those are the stocks that are going to be outperforming. I've given you a lot of things to think about. I've given you my favorites. So the next step is going in and doing your own research and seeing if you come to the same conclusions. If not, again, I would love to hear it below of the companies that you would prefer. The other thing I would love to know is what do you think? What is the next series that we should do? Do you have any series ideas that we can do this approach to of any types of industries you're wanting us to dive into? We're super open to that as well.
Yeah, thank you for sharing. Alex is the no hype investor. We're always looking for ways to help new investors grow and invest and build wealth for the long term. So, Alex, thanks for sharing today. Appreciate it.
We'll talk to you soon.
Likewise. Ciao.